First of all, I'd like to invite the panelists to join me on stage. So we have Michael Adams. He is president at the Ocean Assets Group. We have Chris Gorrell-Barnes. He is founding partner at Ocean 14 Capital. And we have... yes, if you sit over there. And Suzanne Johnson, Senior Advisor Ocean at United Nations Global Compact. And last but not least, we have Markus Müller, Managing Director, Chief Investment Officer, ESG at Deutsche Bank. There he is. Yes, there's always an ocean bottle somewhere. Do we have Michael Adams? Yes, okay, so he's miking up. Okay. All right. So obviously, this is a conversation that is absolutely vital because, it is about bringing the private sector into the conversation. And so the way I would like to structure it is to first looking at, how do we get the private sector excited about the blue economy? We just heard how there are so many opportunities in the blue economy and how SDG 14 is the most underinvested SDG. So there's obviously excitement, there's the opportunity, but we still need to bridge that funding gap. And the private sector is absolutely vital in bridging that. And then, of course, looking at the importance of larger institutional investors, because we have heard this, we have impact funds, we have small-scale innovators, but how do we actually get the large institutional investors involved? And then also looking at some of the themes. What are the themes that are especially exciting from the private sector point of view, including, for example, aquaculture. But then also, and building on what we've just heard from the previous panel, how can we build a system that measures impact in a way that is meaningful and build that confidence that we've just heard about. So in terms of getting the private sector involved, and I'd like to start with you, Michael, actually, in terms of, obviously you are a pioneer in blue finance with your work in the Ocean Assets Institute, and also you have worked on initiatives such as, the Blue Impact Platform, the EU Blue Invest, and the Pacific Ocean Finance Program, lots of really, really pioneering initiatives. So how have you managed to rally the private sector around blue opportunities?
Well, thanks, Martin. This is a pleasure and an honor to be with such an impressive panel. And I hope we'll be able to be effective over time. We're just starting. And I think that, don't be discouraged by that number that SDG 14 gets less than 1% of the funding of all the SDGs. Because it depends on how you count. These are major industries using the ocean, shipping, ports, the marine energy now accelerating enormously, this whole seafood complex. If you add up all those and see what's happening in sustainability, although it doesn't grab headlines, there is a lot of activity going on, particularly from corporates that are forward-thinking. And we're trying to be part of that, and obviously with the support of Asian Development Bank, we're launching this Blue Impact platform to finance SMEs that are doing positive things in all the blue sectors across the Asia-Pacific region, only the developing countries, of course, since those are the recipient members of ADB. And that's an exciting initiative that's just underway. And because when we say SMEs, the small and medium, it's beyond perhaps the where Ocean 14 is and the earlier stage investors are. We'd like them to be out of the valley of death. And so these are companies that do drive 90% of the economies and 70% of the employment, yet have terrible access generally to capital, including from their own local banks. So there we're trying to be part of the solution. But the other thing that I wanted to make sure gets more visibility, I'm sure it will over the next 3 days, that we were a part of is the Sustainable Blue Economy Finance Principles. It was mentioned in the previous panel. Yeah. And that's guidance for financiers of all the blue sectors. And we wrote the chapters on shipping and ports in the Turning the Tide report. And there's some of my other colleagues who wrote some of the other chapters here. And that's very significant because of it's engaging with the existing financial infrastructure and players for these major industries that are responsible for, shipping's responsible for over 80% of global trade, for instance. And when you talk about green logistics and how all of us and all companies are exposed to the ocean, that's something to look at, as are ports. And so that's one where you have very good guidance on how to finance solutions for some of these large industries that are not hopelessly unsustainable. The ones that we don't work with, for instance, are the extractives, the mining, and the oil and gas exploration. But I'd encourage a bigger view of the blue economy here, and then and engaging with those industry partners who are already in there, and where, as Karen mentioned, radical partnerships are a great model for how we can work ourselves out of these problems.
Yeah, great. Yeah, Michael, that makes sense. I mean, looking at the blue economy in this kind of very narrow way also limits the scope for investment, right? And you mentioned how important it is actually with shipping 80%. I mean, everyone, all of the major businesses have to, deal with that value chains and supply chains, and often, they are connected with the ocean through that, and often that connection isn't seen. So that's a really good point. But also, you mentioned the guidance, sustainable principles, financing principles. Markus, I mean, obviously you were mentioned even without being on a panel yet. So now we want to hear from you. I mean, obviously you're Chief Investment Officer ESG at Deutsche Bank. You see a variety of funds and financing instruments with a focus on sustainability, but it was really good. I mean, earlier when we talked about what you do, it's great to see that you have really focused on the blue economy, which is really great to see from such a major bank as Deutsche Bank. So what has recently stood out for you when it comes to private financing opportunities for the blue economy?
So for us, when we started to look at nature and the ocean, it was really about understanding the matter. Because with this literacy, it really starts. Because if you do not understand what goes wrong, you also can't fix it. And Aura was really one of the driving forces to help us to understand this. Even if I wanted to become a marine biologist when I was young, before I started to follow the quest of a rational adult and then studied economics and Chinese, I think we need really to understand more and more that we are embedded in nature. And therefore, I'm also calling a little bit for caution about focusing too much on this topic of blue finance, because we need a system change. We need a nature-compliant economic model. We should not get derailed by too much focusing on the small segments, because the problems we've talked about already today. We know what the problems are. And if we get caught up in these small problems, in quotes, because these are big problems, but small from a capital market perspective, we really will hinder the finance flowing in the right direction. And what we need is a change now and not tomorrow. But the riskiness of the project, the small scale of the projects, that the projects are scattered across the globe, mainly in the global south, this is very dangerous for the entire system change. So therefore, I say the blue economy is not new. This exists since humans are interacting on this planet. Let's face it. A textile company in Milan has an impact on the ocean. Let's address this. This is the first point of change in the value chains, and not in a startup, and Chris will understand me, and we know each other, not in the startups which will deliver new business models. This is a different topic, right? We need to change the existing system now in order to get it meaningful done. And then we have in parallel to talk about disruptive business models, which starts to disrupt the existing structures. In order to get something in place which is new, which is more than just innovation, putting something on top of something, which I would call development, which we always need for prosperity, and prosperity is the reason, the glue for social stability. If we can't deliver this, we will disrupt ourselves through the wrong action. So let me close the first answer. We are currently using, I think, again, something as a goal, which should be a tool. And we know this from Gotthard, that if you start to use a measure as a goal, it will fail. And this is what I'm currently seeing and really worried about, that with economics, we do not use it as a tool, we try to use it as a goal. And blue finance is not a goal itself, it's a tool, and it's already existing. Just the impact is negative. Let's turn around the impact. Let's move away from the planetary boundaries back into the center. this is what we think and how we try also to address this to the entire Deutsche Bank to focus on this.
Great points, Markus. I mean, you mentioned something very powerful, which is that obviously, it's a tool to an end, and that's why, when we talked about, the key challenges we have, climate crisis, biodiversity loss, and pollution, these are, the things we need to tackle. That's kind of the end goal.
Exactly.
And blue finance, building a blue economy in a way is
which
part
is
of that.
then sustainable, right?
Exactly. And as you said, it's working on these two things at the same time. The system isn't working, so we need to work on that. But also we need to, at the same time, come up with those disruptive business models that we need to fund through, for example, impact funds like the one that Chris has. But first of all, I'd like to ask Suzanne as well, because obviously at the UN Global Compact, you bring business together to kind of rally around key sustainability targets, including on the ocean. So how can we mobilize more private capital for the ocean, in your opinion?
Well, I would tie into what Michael and Markus said, is that, first of all, I think we're under-evaluating the size of the sustainable ocean economy because, you were talking about it, Michael. We talk about this 2.5 trillion number, but actually, when we think about all the harm being done into the ocean and that the overall economy is verging on 100 trillion, how much of that harm and how much of that impact is coming from beyond that 2.5 trillion. So I would imagine there's a whole nother way to conceptualize and think about the size of the sustainable ocean economy, first of all. And I think that opens up into many more opportunities, many of which are investable. But when we talk about finance as a lever or an enabler, yes, that's right, because actually, when we think about the private sector and what we're trying to achieve, I mean, we can achieve much of net zero, much of biodiversity goals, and much of the SDG needs to happen in the ocean. And you mentioned that earlier when you were talking about sustainability and decarbonization of shipping, 2,000 gigawatts of offshore renewables, sixfold of ocean food, et cetera, ending waste into the ocean. And so much of that needs to be done by the private sector. And how can they do it? And how can those opportunities come about? Well, a lot of that is setting science-based targets. And if, in a way, you can think about that as a roadmap for where we need to go in the ocean. And so if the private sector companies more and more of them start to create private science-based targets, then we will see very quickly what are the opportunities. Because with these frameworks, what maybe is more expensive now will start to become less expensive, more affordable, and more easily financeable. But we need to mobilize the private sector capital to achieve these targets in the ocean.
Yeah, that makes sense. And you mentioned something which is very powerful, which is actually, everyone in a way has a role to play, even if you're not as part of the official blue economy. And setting science-based targets that are connected with those sustainability goals will ultimately have to, have an impact on the ocean because, shipping, food, energy, all these kind of things go beyond the ocean economy, right? So really good points. And Chris, I mean, we mentioned earlier, with your colleague Francisco mentioned that you have a very impressive impact fund. So now he mentioned 200 million. Is that right? 200 million?
That's the hard cap, which we will get to at the end of June. Yeah.
Okay, amazing. It's very impressive. Congratulations. Obviously, as your colleague said, it's basically it could be so much more. I mean, the fact that you are the largest impact fund is a great first step. But given your success, what's your advice in terms of how to get the private sector excited?
I think that one of the problems with the ocean that we've heard a lot is it's out of sight, out of mind. We're now starting to see the private sector look at the oceans because the interest in wanting to try and solve the climate crisis, or indeed, as Johan Rockström calls it now, it's not a climate crisis, it's a planetary crisis. And the understanding that there's now come out, whether it's the IPCC report that came out at UNGA, or various scientific reports that come out of the key role the ocean plays in mitigating the climate crisis. If we don't have a healthy, thriving marine ecosystem, we have zero chance of protecting ourselves from the climate crisis, and then we have zero chance of ensuring humanity's survival. So that is now being understood. We then have, compounding on that, the Ukraine war and the key issue with food security, right? And the private sector realizing that food security is a key problem and understanding that the ocean plays an absolutely pivotal role in driving food security. And blue foods is arguably the most sustainable, efficient form of protein you can create if done correctly. So all of those sort of communication pieces are educating the private sector to realize that actually want to invest in the ocean. Problem being, where do they invest the capital? There aren't many funds for them to go into, as you've said. You know, we're one of the largest funds that there are, and they're not big enough for institutional investors. You know, you've got pension funds that want to put money into the blue economy, but they want to write checks of 50, 100 million. They don't want to be a third or a half of a fund. So there's a real issue with the supply and demand. You're starting to see more institutional capital want to come into the blue economy. That will be very much our fund too. We've had a great recent success recently where Inca Investments, which is the IKEA money, they've invested 30 million in our fund. And that's gained a huge amount of publicity because that's a real private sector retail investor that's actually said, hold on, we are going to put money in the blue economy because we realize, for the reasons I mentioned, why the blue economy is so important. So to answer your question in terms of what's the advice is, you know, carry on what we're doing, and everybody in this room is focused on the blue economy, which is the most important investment thesis of our time. It is absolutely pivotal. Keep communicating. It's a shame that we have to keep telling people why the ocean is important, but we're getting there. I feel like the tide is turning. The conferences that you put on are great. The information is coming out, the science is coming out, and we will start to see that tide turn, where there'll be more funds, there'll be more opportunities to put capital in, and the big pensions and the institutional capital will come in because regulation, Article 9 is going to be key. They're going to have to put money into impact funds for regulation, and they're going to need to have a slice of money into the oceans and the blue economy. And I think we need to change the blue finance angle. Maybe we need to talk more about ocean tech. Climate tech has got a lot of noise, and people are getting excited about that. But I think, you know, it's still a marketing, still making sure that there's enough vehicles to be invested in, and making sure that there is a really clear understanding that the ocean plays such a pivotal role in protecting humanity.
Yeah, it's that ocean literacy in a way that's kind of that knowledge about it, but it's also, as you said, the awareness of, you know, those crises and how investment in the ocean can actually help with that. Suzanne, you wanted to react to that?
Just as a little add-on to your notion of awareness, it's also awareness of risk. And, you know, what your company or what your organization, you know, how exposed it is to risk related to the ocean. And we're seeing more and more funds. We look at the Sovereign Wealth Fund of Norway, for example, or Amundi, which is one of the world's biggest asset managers or investment managers. They're starting to ask their investments, you know, what is your risk towards the ocean? What is your relationship? What harm are you doing? And what opportunities are you taking from it? So, for example, Norway, the Sovereign Wealth Fund, takes the UN Global Compact Sustainable Ocean Principles and says, you know, we've got 9 principles. How does your company, and it owns 1.5% of all publicly listed stocks, how does your company interact with the ocean? Same with Amundi. And as companies start to understand what is the relationship with the ocean and be aware of that, both the risk and the upside, that's going to start to help too.
Yeah.
If I quickly may add to this, I think we also need to change the verbiage, right? So I think impact is wrong. We have to talk about double materiality. Because no investor of this world, except you really own the majority of a company and you really have a say on the company's strategy, you have impact. Else, it's very difficult to vindicate what impact your euro, your US dollar will have on the strategy of this company in comparison to the situation the company have been in one day before you have invested, right? So therefore, we need to talk about double materiality in both directions. And secondly, I think we always also have to think about what it is, what we're talking about. We have the private market, which is, or the retail investor, which is really 95% of all investors are retail investors. And 5% are institutional investors or professional investors. What do we focus on? Because currently we are discussing the mass market, right? So it should land that everyone, the John Doe, the Markus Müller of this world can invest in. But it won't happen. So therefore, we must make it transparent, the impact, the materiality you have on the ocean in both sides, positive opportunity, negative risk. Because we should not deal with the ocean as we have dealt with the Amazonas or other resources of this planet. This discussion around the next frontier market scares me, that we now start to jump into the last undiscovered area where we are already very heavily active in, to take out resources we think we need. We rather should start to protect it instead of thinking about whether this is a new source for new resources which we can't find somewhere else. Very, very important.
I think impact is important. You're seeing a huge generational shift where young money wants to put their capital into impact funds.
Absolutely.
And I think what we need is the regulation which is happening, that managers, and we do this, that managers have to have a link of their performance tied to the impact KPIs that they create, right? So you need Article 9 funds that are actually doing the right thing, but then actually you have to have managers putting their money where their mouth is. We are only going to get our carry, our performance fee, if we achieve our impact KPIs. And the beauty with the ocean is this convergence of drivers, right? 80% of businesses within and around the ocean thrive on a healthy ocean, right? So businesses that are more impactful, more sustainable, will indeed be the ones that are more valuable. So it's an incredibly exciting investment opportunity for those, whether it's a retail investor, it's an ultra high net worth, or indeed it's an institutional investor that want to actually put money in and get double returns on their capital and their impact. And there will come a point, we've talked about that, where the impact has a value, and that will be an additional value that increases the returns for the investors.
Yeah, exactly. I mean, it's not contradictory.
No.
Double materiality, in a way, is impact that you have on the world and the world has.
Exactly.
So it's not a contradiction. But you are saying there should be more focus in this conversation on
Yeah,
double
because
materiality.
let's face it, if you sell a stock and I buy it, we don't have any influence on the company. If you buy a fund or fund structure in the alternatives context, you don't have any say on the strategy of the companies you're investing in. And this I can't call impact. This is materiality on your money from a risk or return perspective.
Yeah.
And then the economic model around, which we support through these flows at the capital markets, this is a topic which creates the impact on the real world. And this is what I called a nature-compliant economic model. And making transparent the impact the companies already have on ocean. This is important in order to get blue finance in a direction of sustainable blue finance. But this is a part of the system. It's not a system itself.
Yeah.
Maybe we can discover new business models and new areas which we haven't discovered yet, which is absolutely fine. And we call it also sustainable and equitable finance, like including 50 million fishermen who feed 1 billion people. They are not included in the global system. Great. Let's find a way of how to include them. But the sad thing is, they need money which is too small for the global capital markets. So this is a topic we have to solve. But I would really, and maybe it's my German DNA that it's DNA, that it's so pernickety. I think we need to be a little bit precise about what it really leads to and what we mean in order to mess it not again up. And I'm supportive for what Chris has said. But I think we now need to shift away from the verbiage of the past. Right, because we gained more knowledge in the last 5 years, 10 years, 6 years, 2 years. Let's apply this and let's move forward instead of talking about the things from the last century.
Yeah, makes sense. And then it's also a language that investors understand when you say like double materiality. Also, we have rebranded as Economist Impact. We can't just suddenly say that impact is no longer an important word. Come on. So that's obviously more important than anything else. But now I'd like to open the floor to any questions. Yes, there's a question here. And please also send your questions through
And by
Slido.
the way, if you think about the fixed income market, it's a different topic, right?
Yeah.
Because then it's very clear for what purpose you use the proceeds. So there you have not double materiality in the sense. There you rather have impact.
Yeah. So it is, yeah, it's still important. Yes.
Thank you. My name is Bill Collins with Cascadia Seaweed. This is a question for Marcus. I love your passion. Thank you very much. As somebody that drives towards meeting a payroll every 2 weeks, my question is related to how we create the intersection between blue finance in its big terms and making a difference on the ground to folks that are actually trying to do the work that we all want done.
Yeah.
So quite specifically, if I was able to take a value and put it on my balance sheet of the E or the S, and somebody could, and it won't be me, somebody else will say, this is how you do it. And this is how E is valued and S is valued in a global context so that we can start to draw in the traditional investment community that won't touch it because they have no real good way to value the E and the S. Francisco said it earlier, it took him 6 months to figure out how to do it.
Yeah.
So for us, it is a way that we can entice other financing into sustainable blue economy without having to reinvent some new system. So can you comment on that?
Yeah, so it's unfortunately, or fortunately, it's a very complex question. So let me really very briefly put it in two parts. One part is, first of all, let's take the GDP. We have to move away from GDP as the only measure of economic growth, right? So we need to install a system which I would call nature accounting system model, which really sits in the responsibility of the CFOs, which marries the system for environmental economic accounting already established by the United Nations, which values the natural habitats, the natural assets. And then what Francisco has said, we need to plug to this the externalities of the corporates because, let's face it, nature's local, economic activities local, and we employ people locally. Even if we work all global and we have global in our titles, but we all live local and act local. So this is a system change. And the other thing is, I think that we need it's a big, complicated KPIs. So when we lend money to a corporate, we have to ask them also, show me your materiality on the ocean. Show me not just your CO2 exposure, show me also your other negative externalities. Just through this, we will get there. But 95 to 98% of our economic growth in our societies is created by small and mid caps. And the majority of the people are employed there and not at the bellwethers at the S&P 500 or NASDAQ or DAX. How to change those? Literacy is not enough, ocean literacy. This worries me. The bellwethers, they can do it. They have the back office, they have the capacity, the knowledge to deal with global reporting standards. But what's with the local ones? And with the local ones is the Global South. Last but not least, sorry, not two-part answer, three-part answer. It is, if a global bank just creates a global bond for 50 million as a minimum, and the local fishermen in Indonesia need the money for building its business, the 50 million is too much money. We have too much money in the system. We need a cooperation between the global banks and the financial market and the DFIs, local DFIs, in order to close this finance gap, to get the people included. If we don't do this, I think the split will grow further. Mm-hmm. Because the global financial market will further finance the big energy transition projects from the big states, from the governments, but will still not deal with the local people on the ground who have no legal identity, who have no tracking tool for their catch, who have no bank account, etc. Find a solution here. We need the local DFIs with the global banks together to get this done.
Mm-hmm. Yeah, great question, great answer. Any additional questions? Yes, there. There's a question here in the first row.
while you're getting a microphone, may I make a comment there?
Yes, there you go.
Marcus?
Please, yes.
Because what you described is in fact, the impact investment industry. There is an industry which is 80 to 90%, depending on how you count, lending to microfinance institutions.
Yes.
Most of that is, well, it's very debatable. It's kind of a murky area, but they're trying to get into small and medium enterprises now because, after all, that is where the job creation and economic activity is happening. And we're trying to harness that power. You're absolutely right. And these companies don't have the capabilities, the resources to do this impact reporting. But with that assistance, that's a big market, lots of liquidity gushing in there that we can capture. It's really a debt world, too. And so we need the debt and the equity work that groups like Ocean 14 are doing to capture the SMEs.
Yeah, we need that combination. There was a question.
Seaweed frustration, but I'd love to talk to you afterwards. We're big fans of seaweed, and we see a lot of opportunities with not only the sequestration, but the marine ecosystem protection, how you're going to be able to strip the alginates, the work you can do with the FMCGs supporting them, the monetization opportunities around biostimulants for soil. There's a huge area there. Need some help, need some clever brains. Talk to Francisco, talk to Torsten Thiel, he's in the room. Create a metric for yourself, work with the seaweed community, and I think unlocking that working with government and the right private equity companies.
Francesco also mentioned something very valuable, which is the topic of the global commons. A global common you never really can finance properly currently through our arbitrage system. It's the same discussion we have in our societies around health security, right? So there is something which is not the tragedy of the commons, it's a tragedy of the governance which we need to fix. Because it is our life, which depends on it, right? Nature will find its way through it, but we will get disrupted. And this is institutional work we have to put into place.
Definitely. I think Steve had a question here, right?
Yeah, I'm going to go first.
Okay.
Sorry. Josh Pelferman. I'm working with the World Bank and UN Habitat for the Global Plastics Treaty, but speaking more in a personal capacity regarding plastics, which hasn't really been touched on yet. So from my own investments and the investment facilitation we've done, if you look at the 3 Rs, we find the reduce component too heavily controlled by the petrochemical lobby. There's not a very good incentive for them to do less. We find reuse models extremely cottage-based industries, making arts and crafts or 3D filaments out of recycled PET. When you get into the plastics recycling space, which is the area that my partners and I are investing in, they're usually quite small funds, so people really need less than about $1 million. And this is probably the most important year, 2023, with UNEA 5.2 in the Global Plastics Treaty. Have you found anything bankable? And the second question to the audience is, we're speaking about investment facilitation as if we're creating like nice-to-have technologies, nice-to-have IoT solutions for the hospitality or the entertainment industry. But if you're recycling plastic, you're effectively substituting a public utility service. Are you not trying to get government more involved? So in all of the countries that I've invested in, Nigeria, Ghana, Kenya, Tanzania, South Africa, plastic recyclers are not provided with any holiday taxes or VAT relief, any tax benefits at all. Why are we already did this 20 years ago, relying on donors too much, and now we're expecting investors to solve the solution. But I think government are actually being a bit unfair and getting away with too good a deal.
Okay, great. Thanks a lot for the question. So the first one is about bankable projects and the role of government. Anyone on the bankable?
I mean, to your point about plastics not being mentioned, it hasn't been, and I think plastics was arguably a sort of a gateway drug into the oceans probably 5 years ago. Blue Planet 2 did a wonderful job of actually making people give a shit about the ocean because of plastics. I think it's not bad that we haven't talked about it because we've talked about a lot of the other areas, but it is a key problem it's a key strategy for our fund. We look at how do we stop plastics getting into the ocean. We look at sorting, collecting and recycling. Your question, are there bankable projects? We've made an investment in a company called Ion in Norway, which is focused on traceability and circularity as a service. We see that as a very important technology platform that actually can play a key pivotal role in the plastics crisis. I think we've got very strong governmental tailwinds with plastics, as you said. The fact that regulation is coming, that we're going to have 30% of our products are going to have to be recycled plastics. There's not enough supply. There's a big issue. There are certainly bankable recycling companies we're looking at all over the world, whether that's in Indonesia and in Europe. So I think there's a lot of interest. There is certainly opportunity. We see more in mechanical recycling than chemical recycling. We're a little bit unsure of that. But certainly see opportunity. There's definitely interest from money to go in to try and solve the plastic crisis.
Amazing.
So, you know,
Brilliant.
we're quite positive.
Thanks a lot for the question and the answer. I know we're running out of time, so quick question, Steve.
Yeah, I wanted to ask a question about the current economy. We have high inflation, high interest rates. VC investments were down 35% last year. We're in a risk-off environment. Governments are straddled with historic levels of debt. Ocean investments have to compete in the market with other types of investment opportunities. So in this risk-off environment, what types of investments are you seeing that can compete where there's this fear and there's less money going around?
Great. Yeah, thanks a lot for the question.
You know,
Quick answer, please.
Fear, huge opportunity. We certainly see some of the valuations now coming down. I think there was a lot of very frothy valuations, and you see in the blue economy, you know, the early stage, the seeds, the pre-seeds, Series A, you are seeing a lot of ridiculous valuations, and we certainly see a lot of capital destruction in that area. But where we focus on growth capital, we're getting a lot of proprietary deals. They want more than just money. They want to work with us for our access, our knowledge, the fact we know how to execute. We know how to help these companies scale. We know how to help them with their marketing, their sales. We know how to operate their farms, for example. So we see as a huge opportunity now to actually be able to get very good valuations in this current climate.
Brilliant. Yeah, thanks a lot,
And
Kristen.
also,
Quick.
just to add to that, on the other end of the spectrum in fixed income and debt, yes, of course, it's facing some quite challenges in the market right now due to the conditions you just mentioned. But equally, there's been some great blue bond issuances recently that have been oversubscribed, that have opened up new pools of very stable investors to both companies and countries issuing them. And so I would call attention to a very strong issuance by the first blue wastewater corporate bond that was issued by BRK Ambiental. It's ultimately owned by Brookfield, which Mark Carney's involved in. But that was oversubscribed. It ended or dramatically reduced waste going into the ocean throughout many municipalities of Brazil. And it was a huge success because it had a long-term, 20-year tenor to it. And it was willing to take a look at, in the long term, in 20 years, we're looking at managing long-term risk.
Exactly. Yeah, that's a really good final word because we've run out of time. But yeah, blue bonds, we shouldn't neglect that opportunity, and it's a way of highlighting that even in times of risk-off environments, there is opportunity. But we heard about the fact that the blue economy is actually much larger than we think it is because it has all these connections through supply chains, through value chains, through shipping and other major industries, and there's obviously the need to be aware of the risks, but also the opportunities. Looking at some of the regulatory improvements that have happened to make it easier in a way to look at investing in impact in the ocean, and also looking at double materiality, and which is obviously important. Also, looking at both the risk and the impact on the world, but also the world's impact on business. And if we look at that in the ocean community, there's a lot of opportunity. And you mentioned also bridging that gap between the global banks and the local DFIs, which actually really vital in terms of making this work on the ground and bridging that gap that we have identified in terms of having some large investors, some small scale opportunities, but finding that middle ground, as we have said earlier. So it's really exciting to see that there's this private sector opportunity, and hopefully we can continue the conversation after the break. But now, first of all, we have a break of 20 minutes. If you could come back in 20 minutes, that would be amazing. Thank you very much.